Good evening, ladies and gents. Welcome to another video brought to you by Total Control Traders. What a crazy day in the market. One of the biggest bear actions we have seen for some time. SPX dropped almost 3%. Hope you guys are all staying safe out there. I mean, lots of opportunity coming up. And I do believe it's going to be either today or tomorrow. So, let's take a look at the market without any further delay. Same as usual, we're going to start with SPX, but today we're going to do a deep dive to take a look at where the market potentially is heading now that we've lost that key support. All right, first one, SPX. So, as mentioned, today we're down 2.87%, and the whole market is pulling back. We are witnessing what's called basically a consolidation. Now, if you look at any single ticker, there's going to be extremely rare that you're going to find one or two, some tickers that are moving bullish, because this is a whole market pullback. Up till now, you were able, the last week and the week before's consolidation, you're probably able to find one or two tickers that are still moving bullish, but this is now different. This is now a market-wide consolidation. So, and if you do find those one or two tickers that are moving bullish, should be a little bit concerned on what's going to happen when the market starts moving bullish. Right. So what we're looking at here is potentially a broadening wedge that had broken bear. So this was a descending broadening wedge that had broken bear today, and the bulls were able to save it right at the end of the day, saving that GP. So this is a little bit of a concern because we did lose that key area that we were looking at. And I did enter bullish on SPX end of Friday, but knowing that this could potentially be the case. Because when we look at the lower trend line here, this long-term trend line, there were two trend lines that we're looking at. Due to the last bounce, so we had this one, which also works. We can see that it would never closed under, did not close under here as well. So that's why we found support on that middle trend line, as we can call it. But as soon as that broke Friday, we were right at that lower trend line along with the previous all-time high support. Today we saw bear follow through, huge bear volume. Now where is it going to go from here? So what I'm looking at is the 80 is reaching that oversold. 8 hours was at oversold. 8 hours was at oversold right before they closed the market. The RSI for 8 hours was at about 20. 4 hours, we did reach that oversold RSI with 18. So in the teens, extremely rare. Now if we were to look at the 8 hours, very rarely does it ever go down to that oversold condition. 1, 2. So before then, this is the bigger pullback, and then the pandemic. So every single time we reached around this 20-25 area, we saw a bounce. Now, that's not to say that this is what's going to happen on this consolidation. We could very well see something like this where we come back down and then bounce before another leg down. Now, I want to take a look at this one. So oversold, huge bounce, continue to grind up. Okay, so regardless, what I'm looking at is a bounce that is going to be coming on SPX. Now with this, first, we did get over that already 8 just before the market closed. That last hour of the market, huge bull run. Nowhere near overbought yet on the already. RSI is looking at 48. So there will be continuation that I'm looking for. And if you did enter on Friday's end of day, there will be some room to, so as of right now, the daily A is going to be around that Friday end of day close. Coming Tuesday, tomorrow into Wednesday, I do want to see continuation at the very least, and then touch the daily 8. Watch what the reaction is from there. Now let's take a look at NAS. NAS, we bounce right from that key zone, just under the GP, very key. Okay, this is very key to note. We did bounce from that key zone, so ultimately the short-term trend line has been lost, but that must-hold zone for NAS was not lost. whereas SPX did lose it. To me, this would have been a must hold for SPX, ideally for bulls, but NAS is still in the daily uptrend. So this today was a daily higher low comparing to that last higher low. So NAS in relevance is still stronger. Next is RUS, and RUS is still in the daily uptrend as well. So daily lower low, lower high, higher low, higher high, and now it's a higher low as well. We did lose that GP. We're bouncing from the 0.786. That means that the bounce is going to be relatively weak. The way I'm looking at this, we should bounce to at the very minimum 0.382, which is actually not that far away. So this is the 0.382 is just above where we saw the last bounce from. That makes sense in the sense that, you know, if we were to bounce from here, we could see a trend line rejection before coming back down again. So that is a potential. Second potential scenario that I'm looking at is a bounce to the 0.5, come back down to, did not find support here last time, before another leg up to the GP. So scenario number 2. So this is for us. Next is Dow. Dow did not bounce from any notable area. We did get slightly down below that previous support. You could say that it bounced from support over here, but doesn't look that too clear to me. Essentially, we did hold the GP, and we are seeing follow through after hours as of right now, but we're gonna need to see further follow through on this bounce. So same thing, you draw a fib, GP makes sense. So if you're expecting Dow to bounce to GP, I would expect the rest of the market to bounce to GP as well. With this, I'm not noticing any notable area around 0.382, maybe over here. No, there's a bounce here, some supports over here. So this could make sense. We're gonna have to take a look as it gets closer to that area. Watch what the reaction looks like. We are extended from the daily, so I would expect further follow through on basically the whole market. Okay, next is US dollars. Okay, so US dollar was in extremely bullish mode for last Thursday, Friday. Yeah, last Thursday, Friday. This was a little bit of a warning sign that the market could see further pullback. Now that I'm looking at this, if this US dollar continued to be bearish from here, today is somewhat of a shooting star candlestick. So there is a potential for a head and shoulders pattern. You have to watch for this neckline right here. This must hold. If it were to come back down, we do not want to lose this neckline right here. All right, next is, if you're in US dollars, if you do lose it, it is actually a good sign for the bulls in the market. Next is US 10 years. Very clear resistance. 1, 2, 3, 4 sections, 4 parts of rejections already. Holding up very well though. So the way I'm looking at this is because it's holding up really well, I would anticipate eventually a bull break on this. So as of right now, that is the key resistance to break. This is the key support to break for bears. All right, next is gold. Gold is looking good for a bullish market. There is a chance for inverse head and shoulders. So very similar idea. Neckline to break is right at this GP. Not going to draw that out. It's very clear here. So watch for potential bullish action on gold. If that does happen, that means further bearish market to come. Now, in this case, what I'm looking at, because market is looking for a bounce, we could potentially be looking for a little bit of a sideways action, same as back here, before another bullish action in gold. Okay, pay attention to pay very close attention to Bitcoin, because crypto market seemed to be serving as a little bit of a leading indicator for the market. And last time we had a bullish action on crypto, on Bitcoin, we saw bullish action in market. Last time we had a bearish action in Bitcoin, we saw bearish action in the market. And today, huge bearish action. That's not to mention, you know, of course, China's everything that's going on over there. Chinese indexes dropping like flies. So with Bitcoin, I'm looking at a potential down move. This is going to be an ABC correction. This is what I'm looking at for potential. So this is A, B. At the very minimum is going to be over here. What's more likely, it would be probably around GP, which does line up with some supports as well. So this is what I'm looking at for Bitcoin. As long as this money line that's holding, which we've seen previously as resistance, support, more supports over here, back test and rejected over here, broke over, became support again. So this trend line is still relevant. We are seeing a slight bear break in the after hours right now, after hour of the market, but during the hour for Bitcoin. So in this case, ABC correction would still remain bullish overall for Bitcoin as long as this support holds over here. Okay, next is HIVE. HIVE is actually in a decent area for entry today. I was looking at this today. Give me 1 second. I just recently updated my charts here. Anyways, okay. Yeah, so HIVE is in actually a very decent entry area right now. We did get to that GP. We are in that key zone. We are in this previous very notable resistance, support, and then somewhat of a support here chopping around. But this is a very notable GP right around that key zone with the gap down. Would anticipate that this gap is going to go back to fill, so that depending on what the crypto market is going to do. So from here, what I'll be looking at is a very minimum a bounce to the gap fill. .382 is not really lining up with anything. It does line up with these previous supports here. So it could happen. That would be somewhat a likely scenario that I'm looking at. You know, depending on the bounce, we could come back to back test this trend line, this money line that we're looking at before. So that would be HIVE. And let's get into the hottest tickers. And the first one is AAL, American Airline. So American Airline saw a very clear bull break on the short-term trend line today. And we did close near the higher of day. Throughout the day, we did see relative strength as well. So first thing, drop down, huge bounce. And then we saw a slow grind up. Even with the market continue to consolidate, American Airlines saw decent bullish action today. Very nice bullish volume today. So tomorrow we're gonna need to see follow through. Same as any other break, you know, any trend line break. You see a very nice break on volume today. Tomorrow you're gonna need to see follow through, especially right now we're at the top of the key zone. Ideally, what we want to see is from here a revisit of this support resistance, a back test before another leg up. So this is what we want to see. Gonna have to pay attention to American Airlines tomorrow. Chart looks pretty good for continuation. You see how there's a bear break a couple times and then no follow through, immediate buy up, and then coming back down to Is this 1 cent off? 1863, 1864. This looks amazing for the current market right now. American Airlines is gonna be on top watch going into tomorrow. Next is MAR. So reopenings seem to be doing fairly decent. MAR, we did see a rejection. So this is a probably majority due to the market, but regardless of the reason, you know, there's always gonna be this is the reason why we don't look at fundamentals. You know, not saying fundamentals there's anything wrong with it. It's just what preferences are. I personally think that the chart is gonna tell a whole lot more story behind what's going on versus fundamentals, just because when the chart says it's going to reject, it likely will reject. So we did get over that GP. We did get to that 1 to 1.272 extension target, and then we saw a gap down pullback with a deep dip being bought immediately. Now if this is anything like Tesla, what you'll see from here, okay, so we did see the pullback. If this is anything like Tesla, what you'll see from here is slight move upwards, slow grind up before a drop, which I don't think might happen depending on what the market looks like. Something like that. So this is not often that you see this kind of drawing from me, but it could still happen. MAR, Marriott remains strong. We are in a daily uptrend. We are seeing that huge dip buying on the daily, saving that daily as well. It should remain on top watch. Next is Tesla. So as mentioned just now, you know, you look at this huge dip buying, slow grind up, saving that 88, and then the dip down, a gap down. Oh, there's a lot of lines here. Let's clean this up. Okay, so gap down, we did see a loss of that short-term support, that short-term trend line from this low to this low. We did see Tesla try to save it before a move down, bear break, increase in bear volume, unable to see follow through, dip being bought. So Tesla actually looks very decent right now. From here, anticipation would be at least another revisit for the trend line as the market bounces, sorry, not trend line, resistance before another potential rejection. Tesla looking decent, not as strong as the reopenings, AAL and MAR. Next is FD. Now, before we discuss this chart, just want to make sure this is going to be one of those that's potentially a hot potato kind of thing. You know, we drop all the way down from $60, all the way from $60 down to, I think it was like 90 some cents. Let's see, 87 cents before the bounce started. So the bounce has been crazy so far. On Thursday, when I noticed this, it was already up at about $1.40, so it's 63%, and then it ran for the remaining of the day up until 140%, closing at 130%. Then the day after, it ran for another 133%. Now today we are seeing continuation. As long as it's holding that 88, I don't really see any reason for exit. You know, it's depending on how much room you want to give it. Ultimately, I think 4 hours should be okay too. Yeah, 4 hour 8 should be okay. Already 8, you know, there's a little bit more chop around it, so maybe give it like a couple percent below the already 8, 7%. Whoo, wow. This one was 11%. Yeah, so just depending how you want to play this, right now is a what is this? Already uptrend, higher high, higher low, lower high. Now it's potentially going into a wedge. So it could be looking at something like this. Phase drive, not Facebook. Phase drive is what I would be looking for. Would be a daily higher low or even a lower low before an entry. So if it does come down to daily lower low, we will be looking at bull divergence with should see decent follow through on this. Ideally, we want to see a daily higher low before another leg move up. One of the very rare charts that are green in this market right now. Alright, so I'm going to keep the video short today, discuss probably another couple tickers. One thing I do want to mention is we always talk about making sure to scout for those relative strength charts while the market is pulling back. This is when it's going to come into use. You're going to want to use those relative strength charts and making an entry while the market is bouncing, because those charts are more likely to bounce better than the charts that have not seen relative strength. So with that being said, first one we're going to take a look at is space. Now today there is no relative strength, but Friday there was relative strength. This is a little bit of a choppy chart right now, because if you draw a trend line from up here on the daily, that you will see that it has broken bull. But on the hourly, when you zoom in, you see rejection 2, 3. And technically this is another rejection. We did close near the high of day on Friday, and then today was a gap down, sell off. We are at that money line again. So space, there is opportunity. Keeping a close eye on this back test. Well, depending on how you draw this, shorter time trend line. Yeah, so technically it's a back test. Wow, that may have worked out perfectly. So keeping a very close eye on space going into tomorrow. Gonna want to see that follow through, getting over the hourly 8 with a continuation. So as of right now, there is a daily bull divergence that's playing out. Daily bull divergence right here. And we are seeing an hourly trend change already with lower low, higher high, higher low. But we're gonna need to see follow through tomorrow, breaking over that longer term trend line for full bull confidence. Space is going to be on top watch tomorrow alongside AAL, MAR, maybe FD. I think FD will take a little bit more time. And last but not least, we're going to discuss is Zoom. So Zoom, as mentioned before, potentially looking at a repeat of Amazon's pattern. Gap down on earnings, slight bounce, sell off before an actual bounce to fill the gap. So as of right now, we are still seeing relative strength in the sense that, you know, the market pulled back, SPX pulled back 3%, Russ pulled back like 4%, while Zoom is holding up relatively decent. We are not seeing huge bull, but in this kind of market, I would consider this strong relative strength. In this sense, tomorrow, as the market bounces, we're going to want to see volume coming in, breaking over that key resistance 300, 302, all the way up to 306, and then into a gap fill. Ideally, you want to see a close over 306 with another continuation day before a higher low, and then a gap fill. So everything on this picture has worked out so far. What to expect from here would be from here. So this is what Amazon did. Higher low before going for a gap fill. Let's see if it works out same as Amazon. Amazon actually never filled the gap completely. Let's just take a quick look at this. So if we look at this, the gap fill is right here. It never 100% filled the gap. It did reject from that upper key zone. Right, so that's it for today's video. Hope you guys enjoy the content. Make sure to share our channel if you enjoy the content and you know anyone who might benefit from it as well. Again, a reminder, as 250 subs coming up, we will be doing our first giveaway. Make sure to keep an eye out for that. And thank you guys for all your support, watching, subscribing, as well as sharing. I will see you in the next video.